Hey guys, I wanted to do a quick video about offsetting trades. Volume Leaders automatically identifies large odd lot trades that are of identical size that are they come in within 90 days of each other, and they aren't they're uncommon sizes in that they're not divisible by 1,000. They're not trades that you see often. They're weird trade sizes, and the assertion is that the first is an open and the second is a close, and that you can detect to some extent when an institution has closed a position because you'll see the opening trade at a relative higher low and the closing trade, or what we presume to be the closing trade, also at a nearby higher low. So the example I want to talk about here is we saw two on the same day on October the 5th. And I tweeted about this. You guys can go pull up the tweets if you want to. But UPRO and SPXL are both leveraged ETFs for SPY. And on that day, we saw two very large trades come in. The SPXL trade was ranked 12th, and the UPRO trade was ranked 20th. And the fact that they both came in on the same day, and they were both offsetting trades, and you can see here this tab outlines the offsetting trades of the day, and they came a minute apart, was suspicious to me. So naturally I went to look at the charts, and I clicked on this link here, which will pull up a chart for that particular stock on that between this day here listed and the current day. So this is the offsetting date. This is the date at which the presumed opening trade has arrived. And so for UPRO, you can see it was 1,536,356 shares traded here on September the 27th, and then the same amount again traded up here on October the 5th. And you can see that this comes in at a relative low. It wasn't the low down here, but it was low, and price popped and came back down and retested, and then had a nice rally there for a few days between the 1st of October and the 5th. And then this trade arrives, which suggests that this trade up here at the high is the closing trade that corresponds to this trade here closer to the low, and that the institution that traded this made $3.13 per share. So $3.13 times 1.54 million over 8 or 9 days. Pretty good trade. When we look at SPXL, which the chart looks nearly identical, with just different prices on the y-axis, but behaves the same way because it's derived from SPY. And you see that the original trade also came in on September the 27th, and this time it was 814,763 shares. And then up here, it was presumably closed out about around, let's see, $62. So about $6 a share. It's a pretty good trade. So you can see here, they come in, we look at the charts, we see that these two ETFs, which are both based on SPY, which both arrived, are opened presumably at the same day, on the same day I should say, near the same time. So this was at 4:08 p.m. and SPXL was at 4:10 p.m. And then the closing trade for UPRO was at 4:04 p.m. and the closing trade for SPXL was at 4:05 p.m. So somebody is traded both of these probably, or it's perhaps two different institutions doing it, but the trade times and dates are so close to each other, and the trade sizes are identical and unusual and strange, such that it's conceivable, if not logical, to assume that they are related to one another, and that this first trade is the open and the second trade is the close. So why is this useful information? Well, it's useful because if you know that an institution has closed, particularly at the end of a rally or at the end of a decline, then you can, I don't want to say assume, but it does suggest that they're expecting that leg to be over. So this move up from here to here is either over or close to over. And that gives you information that you could potentially use. In this specific case, October the 5th was a Wednesday, and October the 7th was the non-farm payrolls report. And those things always stand out to me as important events. They're kind of like CPI and FOMC dates. They're big market movers. So when I see this trade arrive after a rally, a day or so before the non-farm payrolls report, it stands out to me, and it suggests to me that maybe the report is going to be negative, or maybe it doesn't matter what the report says, and institutions are planning to use that as an opportunity to take price back down. But regardless, it's a signal if I was long to exit longs, and if I wanted to take a short, it's an opportunity to do that. In this case, I was pretty confident that this would prompt or yield a reversal, and that the NFP report would come out and price would dive. So I actually took a short position going into that. I think I put a short on 5 or 10 minutes before the report came out, just because it seemed like an obvious, an obvious trade to me, or at least an opportunity. And if I was wrong, I'd be wrong, but it seemed like if they were going to take it up further, they would not have exited here. This looks to me like they're done, or close to it. So if we look ahead a couple days, we can look at UPRO first. We see that the trade came in here after hours on the 5th, and during the session of the 6th, price did decline some. So one could have shorted here, but really this is more of a signal to get out of longs than to enter a short. But price did decline, and then popped just a little bit here pre-market on the 7th, and then this is the non-farm payrolls report straight down. And you can see price returned almost all the way to the low. In fact, it dropped lower throughout the rest of the session, lower than where the original trade began. You'll see the same for SPXL. Same pattern, because they both follow SPY. Price declines a little bit, pops into pre-market just a little, and then boom, there's the decline from the NFP report. And if you look at this with SPY, you can see that price peaked here around just under 380, maybe 379 or so. And by the end of the non-farm payrolls report, and by the end of that Friday session, price had dropped all the way back down just above 360, maybe 362, 363. So that's a pretty substantial move in 2 days. And that's why they got out. SPY drops, $16 or $17, whatever it is, in 2 days. And it explains, in hindsight, why they closed their position here. So that's it. Now you can see these in a couple of different ways. One is from the offsetting trades here. Whenever an offsetting trade is detected, you can click on this offsetting trades tab. When you go to the trades menu here, there are a bunch of tabs. The large trades are what show up by default, but you can click on this offsetting trades tab. You can see what's here. You can do your filtering and everything else. But you can also see by just looking at the disproportionately large trades tab here, whenever a trade has a little C after it, this suggests it's a closing trade. Now, we can't know for sure. These things aren't labeled opening trade, closing trade. We'll never know who did them and why. We just know that a trade happened, but we can tell some information about the trade, and that is that this thing is such an unusual size, and it corresponds to another trade of an unusual size during a recent period of time, that it gets flagged. And it gets flagged so you can go and do more research. And anyhow, closing trade. And then the last time it traded that large, of course, is here too. But what's most interesting is that this trade here on this day, on October the 5th, is flagged as a closing trade. So that's it. Just another feature of the site that tries to help you find unusual events that might be relevant, that might help you position yourself according to more closely to how institutions are positioned. And that's it. Have a good night, guys. Bye.